Good morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 1st December 2021. In the international market, a new twist in the Omicron saga. Drug maker Moderna raised concerns about the efficacy of vaccines against Omicron coronavirus variant. Result: rush to safe havens once again. With this hope, US 10-year yields dipped by 9 basis points, closing at 143 percentage points, and 30-year yields also dipped by 9 basis points, closing at 178 basis points Tuesday. This is after South African doctors and US President Joe Biden calmed the markets, saying Omicron is a cause of concern but not for panic. On the other hand, Fed Chairman Jerome Powell said yesterday that officials should weigh removing pandemic support at a faster pace. He also reiterated the word transitory to describe stubbornly high inflation, with a new COVID-19 strain remains a risk. The next Fed meeting is on December 14th and 15th, and market expects them to finish the bond purchases few months earlier than planned. In the crude oil market, crude is now trading at $70.57 per barrel, with the fear of Omicron again choking the global demand. Crude oil short-term range seems to be 70 to 73. In the currency market, dollar index for DXY is at 96.01. Short-term range for DXY for today seems to be 95.75 to 96.24. USD CNY or Chinese yuan is at 6.36. Please note that the sudden drop in the USD CNY making CNY stronger, and we expect the same for Rupee as well. USD INR with a high of 75.19 closed at 75.70. Support at 74.75 and resistance at 75.15 does exist. Trading strategy for currency. Knight research team do not see any meaningful weakness in INR from here. Knight research team expects USD INR back to 74.70 within a week, but close your positions by Friday as US non-farm payrolls are due this Friday. In the domestic market, one of the reports by Bloomberg cited India's FY22 fiscal deficit to cross 7% against the target of 6.8%. The benchmark indices, which was enjoying the rally due to Omicron uncertainty, halted the rally on this report of overshooting the fiscal deficit target, which means more borrowing at the end of the year. 563 2026 closed at 564 versus 566 the previous trading day. Intraday low was 562. 610 2031 closed at 632 versus 633 the previous trading day. Intraday low was 630. Public sector banks were net sellers with rupees 5,630 crores, whereas foreign banks and mutual funds have bought rupees 1,721 crore and rupees 1,425 crores respectively. Trading strategy for the domestic market. The analogy to enter 637 and exit below 634 has still worked, but yesterday, as we advised, because of the Omicron uncertainty, if the benchmark yields are falling below 632 on a closing basis, which is exactly the case, we had recommended to hold on to your holdings. If the benchmark yields rise above 634 on a closing basis, sell and book profits. As of now, the yields are around 632, and hence continue to hold your positions till 634. Trading range for 610 2031 seems to be 630 to 634. We have a possibility of 610 touching 628 if the Omicron uncertainty continues. That's it for today. See you tomorrow with the new episode of Night Snippets.